Well, hello everyone and welcome to Momentum Finance channel. My name is Mo, and in this video I have the honor of inviting a new guest, a millennial 33-year-old investor who is actually doing quite well with a net worth of almost $500,000. Welcome to the show, Nina.
Thank you, Mo, and thanks for having me.
It's my pleasure. We got to know each other a little bit about through the Blossom app, and I followed your journey over there. I was really impressed, and I thought, you know what? I think a lot of people would find your story and your journey inspiring. Being so successful at such a young age, and your pursuit of financial independence is something that resonates with me, and I think would resonate with a lot of folks. Why don't you introduce yourself a little more, Nina, to our audience who may not know you as much?
So, hi everyone. Like Mo said, I'm 33 years old, millennial investor, and I think we met each other on Blossom, and I'm so passionate about investing because I'm looking forward to
Mhm.
get to financial independence, not necessarily retire early, but at least I want to get to financial independence. And I feel like it's a really big part of me. And also putting this out here because I'm an immigrant, of course, and I knew nothing about investing. I had to learn it. And this is just the best way of just letting people know about it and just really putting this information out there because I feel like we should all have the options to do whatever we want with our time. That's my goal, right? I don't want to keep working a corporate. But we're gonna get more into that during the interview. But for now, yeah, Nina, 33 years old and a millennial investor.
That's awesome, Nina. And how long have you been investing in the stock market? Is this something that you got introduced to recently, or have you been investing for several years now?
I wouldn't really say a lot of years. It's just honestly maybe 4.5 years because I officially started open my first account. That was in July 2020, and that
Oh,
was
wow.
during my 29th birthday because I didn't want to
Mhm.
I was so scared getting into my 30s, not starting investing, and I didn't want to put it on hold anymore, even though I had debt. So I was like, you know what? I'm just gonna go ahead and start because I don't want to leave the 20s and get into 30s when I'm not investing. Because at that point, I had understood the importance of investing and time, which is the biggest factor when it comes to investing.
That the power of the time for compounding really helps you. And I mean, I must say, you've been doing amazing for only such short period of time. That's really remarkable what you've accomplished. If I recall correctly, in one of your posts as well, you talked about, I think, like through that journey, I think you had to also. I hope I remember accurately, but you might have as well had to go through some of student debts, if I recall correctly. I hope I'm not wrong.
Yeah.
Can you elaborate
I
on
did
that as
had
well?
debt.
Yeah.
And that's why I was paying off my debt. But when I started investing, I still had debt. And I was like, you know what? Because when I started, I was just following the Dave Ramsey plan because that's how
Hmm.
I even got into financial literacy. I don't know if Dave Ramsey is very popular in the United States. And
Yeah.
I feel like I don't really relate to everything he teaches, but his core principles of paying off debt, they really work if you follow them. So at that point, I was following his plan. And his plan was that you should pay off all your debt before you start investing. But when I started doing more research and reading and understanding the power of time and compound interest, I was like, I think I can do both. I don't
Hmm.
necessarily have to wait to be debt free, especially if you have a lot of debt, because the cost of time. So I was like, okay, I still had debt and I paid over almost like 100. If you include the credit cards I had and other personal debt, it was like 100 and almost 140,000 because I had student loans, personal debt, and then I had some credit cards and all of that. So yeah, but by the time I started investing, I had very little to pay. It wasn't a lot at the beginning.
So over time you manage to kind of bring it down, but at the same time trying to not wait until all of the debts is paid, trying to strike a balance between, while you have a plan as to pursuit of paying the debt off, in the meantime starting the investment journey so that you can capitalize on that power of time. How do you go about investments? From what I recall seeing on Blossom, I think you're not just a passive investor. You do actually have individual stocks in your portfolio. Tell us a little bit about that. And obviously, this in as we talk about it, it's not a financial advice by any means, but more so around we want to learn about your approach, how you go about it, and learning a little bit from your journey.
Yeah, so when I initially started, I read the book The Simple Path to Wealth. So because I was
Gail Collins.
researching, because mind
Yeah.
you, no one around me was investing. So I didn't have anyone to ask questions from. And I was doing my research and all of that. And I saw The Simple Path to Wealth. I read that book and it's like, play it safe. Just put everything into one index fund, which is VT Sachs, and just continue DCAing into that. And I think that's what I initially did from the very beginning. I started with VT Sachs and I literally consistently invested into VT Sachs. I think for almost like 2.5, almost 3 years. I just switched my strategy last year when I started reading more, knowing better, and getting comfortable. Because another thing with investing is that when you start, especially as a beginner, you have no one around you doing it, you're scared because you don't want to lose your money. So I didn't want to start with individual
Mhm.
stocks, pick risky stocks because I didn't know how to even research a company. I didn't know how to read a company. I didn't know nothing. So I was like, you know what? I'm gonna play safe. I'll start with the index fund. And once I got comfortable, once I read more, once I did more research, I'm like, oh, okay. I could switch my strategy a little bit. I can have that as a base, and I feel like I'm someone this kind of topics really intrigue me, and I love
Mhm.
doing research. So I was like, okay, I'll switch my strategy. So when I switched it, I started to own individual stocks
Mhm.
and then also like some dividend stocks. But I now started getting some dividend yield traps. That's what you call yield traps. I was
Mhm.
chasing high yield. And I was like, when I did that, I came back, did some research, watched some videos. I was like, oh, I'm too young to be investing in this high heel
Mhm.
stuff. Like I had some of them that were paying like 13%, some REITs and stuff like that, 14%. And I'm like, I don't really need this income right now because I still have a 9 to 5 job. This is for people who are like maybe in their 60s, retired, and they actively need that income. So I had to scale back and I switched my strategy to a dividend growth investor. So I'm still investing in high growth stocks, but they pay dividends. It's not a lot, so almost like 1 point something. I'm fine with that because I know that I'm investing for the long term and I'm still young and eventually I could switch the strategy as I get older. So that's where I'm finally at right now.
That's fascinating how even that on that journey, like starting from like more of a index funds while you were still new to the market, following the reading of the book from J.L. Collins. I know even John Bogle from Vanguard and others as well. Like they obviously, and I think even Warren Buffett at times he even has talked about the ease of like using index funds for many investors, and many investors will be better off doing that. But I think there's nothing wrong with pursuing a stock picking approach, especially if something that you're passionate about, you're doing your own research, and you're aware of the pros and cons and the risk that's associated with that. So that's fascinating. Since we talked about stock picking, I'm curious, how does Nina go about evaluating an investment opportunity in stock per se? Like, what are some of the criteria that is important for you when you try to decide what company to invest in?
So as much as I do stock picking, I'm still not very risky. I don't try to time look for the very high risks, fast stocks. No, I don't do that. I go with time tested companies and I go with companies that I use every day. For example, Amazon. Everyone has an Amazon
Yeah.
account. Everyone shop on Amazon. Everyone is using Prime. Myself, sometimes I order like 30 stuff on in a month's time on Amazon. So I was like, why don't I go with the companies I use every day? These businesses are good. They have time tested, they have proven their worth, they have a good, like I look at the fundamentals of the company, right? That's how. For companies, honestly, with companies like Amazon, I didn't do a lot of research because I already know that these companies have been existing for a long time and there's no way they're going out of business anytime soon. They are time tested. So I didn't do a lot on them. But to other companies, I don't know a lot about the company. I actually have to look at the fundamentals of the company, right? And when I'm looking at that, I have to look at the financials of the company. How is this company doing? Because I don't want a company that you go put your money there. And that's the good thing with index funds and mutual funds or ETFs. They're very broad-based. So even if one company is not doing well, they can either
Hmm.
replace that company, like the S&P 500, they have fund managers. The manager can either replace that company and bring in something. So the weight is not on you, the investor. But when you're investing in individual stocks, the responsibility is on you because if it's tanking, okay, you take all the responsibility. If it's going up, then that's when you hear all the hype on social media. But when it's going down, no one is talking about it. That's the thing with those very high growth
Hmm.
stocks. When they are skyrocketing, everyone is like, oh my God, are you seeing this? Are you seeing that? But when it's tanking, no one is talking about it. So you
Yeah.
take all those, and that's why some people just prefer the very laid back, lazy method. So when I'm looking at a company, I look at like the income statement, I look at like their balance sheet and I look at like their cash flow, right? So I want to know like how is this, and the cash flow is what enables a company to be able to pay you a dividend. So if the company doesn't have a good cash flow and you're relying on that company, the dividend could be cut at any time, and that could be a risk, especially if you're relying on that income. I'm also looking at like the balance sheet. Does
Hmm.
this company has a clean balance sheet? How are they doing? What's the sales and all that kind of stuff? And then I also try to listen to their earnings calls when you invest in individual companies. And that's the thing. If you're someone who's not gonna do all of that, just go with the index fund ETFs route because you have to listen to those earnings calls. You have to understand what's being said there. You have to know the growth of the business, maybe for the next quarter, the next year, the next 5 years. What are the plans for that company? So you have to know because if you have a chunk of your money in there, you're part shareholder of that company. So if
Mm-hmm.
anything is going wrong, your money is being affected. So you have to keep up with the earnings calls. And you also have to look at the dividends. It's a lot of different criteria I look at. And I listen to those companies. And that's why there was a time when I had like 55 companies to be very honest. But I had to trim it
Wow.
down because I'm like, how do
Mm-hmm.
you keep up with 55
Right.
business? We have a daily life, we have family, we have work, we have other stuff. It's not easy to keep up with 55 companies and really do well. And I realized that less is more. So I had to scale back down. Right now, I own about, including my ETFs and index funds, individual companies, they're about 29. But my goal is to bring it down to like between 20 and 25 is a good spot for me.
Mm-hmm.
Yeah.
That's nice that you have found your sweet spot, right? And over time, try to kind of decide on what companies like better suit your kind of your portfolio. I like as well the consideration around like time tested companies that you are using their products. Now it's always tricky as well, like like sometimes they talk about like companies that are maybe have a lot of business and whatnot as well, like when the valuations may be so high, it might be really like maybe from an investment perspective, maybe there's less room for them to grow, but the stock market is so complex honestly, like,
It's so
and you
complex. No
yeah.
one ever knows, like
Right, but
honestly.
at the end of the day, since you are using the product, at least I think on the personal level, you have that connection. Like, why I know that to your point, like they're not gonna go out of business. You brought up the example of Amazon. I know my wife and I, we have a newborn, and I can't tell you how much business we've given to Amazon, from anything from diapers to toys to you name it. Like, and it's
Right.
fascinating how much variety of items they have and offer. So
They have.
easy.
Yeah, and they do a lot of different businesses. And even like Apple, I'm a big Apple customer and fan. I just got the iPhone 16 that came
Oh,
out in
nice.
September. I got that. And then I literally just got a MacBook Pro. This is my first MacBook because I've always used the other one. But now I have a MacBook and this is the first MacBook because I always wanted one. So I'm like, if I'm giving within the last 4 months, I've given Apple almost $4,000 of my money. I
Yeah,
might as well become an investor.
yeah.
Like,
Have a
yeah.
have a piece of that pie from
I'm
that
gonna have a
business.
piece of that company,
Yeah.
and Apple has a good valuation as well. Some of them might be overvalued right now, but I'm just like, if you're invested in them, you can just continue to DCA in them because
Hmm.
if anything, if these companies are good, the prices are only gonna continue to go up. That's one thing that's for sure. So you can DCA, you can stay back, lay back. If you see like any cards or like if you see like any slowdown in the market, you can go ahead and put in some more money, but take it slowly, go at your pace and don't follow social media trends. Follow your strategy because it's very important to have your strategy. In a world where investing knowledge is all over the place, YouTubers are pushing out knowledge, information, videos to you with all these thumbnails for you to go watch the videos. You at the end of the day, you need to have your strategy and follow your strategy. That's very important.
Yeah, to your point as well, Nina, right? At the end of the day, it has to like whatever the medium you listen to, even in Blossom, like if you read a lot of different posts. At the end of the day, it has to fit right with your own strategy, as you pointed out, right? You are the investor; it's your money essentially, right? And I agree with the notion that you're saying a lot of especially some of the names that you indicated, for companies that tend to continuously have to innovate, continuously bring on latest type of products, that there's a lot of demand for them. Those are some of like historically speaking, we can speak to the fact that there's a lot of um, proven track record for them to continue to do well, at least for the foreseeable future, particularly if you're investing in them for a longer period of time. We're not, I don't think
Yeah.
we're the type of individuals that we're talking about being active traders. It's not about that. It's about more of investing
No.
for the longer term. Now, Nina, I know many investors that we come across, folks that we interact with on Blossom, similar to you, are quite young, right? So like, and folks that are just getting started, maybe
I'm
this is their
old.
you know yeah, no, but they're just getting started, they're investing, and they have a lot of questions. So one of the thoughts that I have is that, and I think some of the questions I've seen is like, how does like somebody like yourself like manage to use different strategies to set enough budget and enough funds to be able to continue to invest. Like, do you have any tips for those folks? Like, how can you balance, like, of course, the cost of living going up, like, it's hard to find a job, or if you have a job, sometimes they may not have the most high paying jobs. How do you go about, and what are some of your tips around saving and budgeting and investing?
Yeah, so I feel like a budget is very important, and I actually do financial coaching right now, and even the clients I work with, I tell them this all the time. A budget doesn't restrict you. It tells your money where to go rather than you wondering where the money went
Mhm.
every month. So I always tell clients, even if you have a low income job, start with what your employer offers. Because clients will come to me and tell me, oh, I want to invest. I'm like, are you investing already? They said no. I'm like, do you have a 401k, which is, I think, the version of what you guys have as a RSP and all of that in
Mhm.
Canada? And
Yeah.
they're like, yeah, I do have a 401k, but I contribute like 3%. And I'm like, yeah, you're already an investor. You invest
Yeah.
the right. So start with your employer, especially if your employer is offering a match. Take that because that's free money you're literally leaving on the table. A lot of people in my community, especially Black people, they say, oh, a 401k is a scam, all of that. I'm like, no, that's free money your employer is giving to you. Take that money. And then based on how you're working your budget, I always tell people to think about the future. And everyone has their own scale on which they're going. Don't compare maybe the way Nina is investing to the way Mo will invest, to the way Danik or someone else will invest. We all have different strategies, right? We all have different responsibilities. Some people are like, they don't have kids. Kids are expensive. You have kids, so you know. Some people have a lot of other stuff. The only reason why I was able to be that kind of huge portfolio in such a short time was because I didn't have debt. I paid off my debt. And also I don't have kids. I don't have a lot of responsibilities right now. So that alone can let you invest as compared to someone who has 4 or 5 kids. It's not the same. So I'll tell people start where you are with what you have. The most important thing is time. If you run the simulation on a compound interest calendar and see how much $50 can become in 20 years, you're going to be shocked. So just start where you are. Even if you start with $50 a month, just go ahead and start something. Don't make it an excuse. I feel like there's so many things that a lot of us can give up for $100 or $50 a month. And right now, a lot of brokerages allow you to do what you call fractional shares. Fractional shares are pretty much, say, VTR or something is going for like, I think it's trading now for almost 400 and something. If you don't have 400, you can buy it for 100. You can buy it for 50. So that's no longer an excuse because a lot of these brokerages now let you have what you call fractional shares. Go ahead and just get it done. So I'll tell people, and then as your income increases, you can also increase it. You can choose to get a side hustle. Pick something that you're good at it. You can be consulting. It could be maybe any business you're good at it. You'll be surprised. You can get an extra $250 there in a month and throw that to your investment. So the goal is always to try to increase your income, keep your expenses low. I know that that sounds almost impossible right now, but it's doable. I know there's a limit to which of how much you can cut down your expenses, but try to increase your income and just start from where you are. Don't compare yourself to someone else because we're all working on different paths.
Those are really great advice, Nina. I know, and I appreciate as well the transparency around, and the acknowledgement that when it comes to trying to cut costs, it definitely has its limitation. But at the end of the day, sometimes even small amounts of money can, when compounded over a long period of time, they can really grow into a bigger chunk. And you rightfully talked about the option that a lot of brokerage accounts these days provide for fractional buys. So it makes it so much easier. You don't have to say, oh, you know what, I don't have this much amount, so I can't really go and buy shares of this stock or index fund or whatnot. You can buy even
Yeah, it's
as
very
fractional.
accessible now.
Yeah, yeah. And then also your reference to trying to find creative ways using tapping into your talents to create extra sources of income. Even though they might be small, any portion can help, and especially if
Yeah.
you're capitalizing on that and putting it towards investing for your own family and your future, and not trying
Mm-hmm.
to compare yourself as well to others. Use others as a point of inspiration, but I don't think you have to compare yourself, because to your
Right,
point, everybody's situation is unique and different.
right.
Absolutely. And Nina, I want to ask as well a question around you on the onset of the call. You talked about the pursuit of financial independence, not necessarily from the lens of retire early per se, but more so from financial independence, from that level of having the choice, the freedom to have the kind of the kind of the power to make a decision at some point. Have you kind of landed on necessarily specific time frame or maybe a specific number? Tell us a little bit more. And my question, a follow up to that is, well, how do you make sure you're on the right track along that journey?
So I think when it comes to the fire number, I'm looking at like I'm using the 4% rule, and that's just a rule that was put out there. It might not really apply now into this maybe economy and all of that because things have changed a lot from when that rule even came out, the rule of 72 and all of that. But I'm using that. To me, my financial independence number right now, it's between like three to $3.5 million. I'm 33, right? My goal is
Mhm.
to retire by the time I hit 45. And so I have about what, 12 years to go. Even if I don't get to that number, I'm still gonna be like, I just want to leave from working. And when I say retire, people are like, oh, you're gonna retire. What are you gonna be doing? You're gonna be so young. I want to just leave from working a corporate job. I want to do work that I love, like
Mhm.
work that I love, and I'll do it on my own time. And that's what I want, not necessarily just like I don't want to be like on a company's time. Of course, you have to put in your work, and the reward for that is a paycheck. I don't want to do that. So even if I don't get to that number, I run the simulations. I might not get to there because I just consider that I might need at least $100,000 every year to live off of that. Even if I don't get to that number, I feel like even with what I have, if I have a part-time job, and that's why when I started investing very aggressively so that when I
Mhm.
get to those years, even if I'm not able to contribute as aggressive as I was doing right now, compound interest is already working for me that those investments are still gonna grow. They're gonna grow so much that by the time I get to official retirement age, which is like in the US, it's like 67, I'm gonna have way more than enough money than I'll ever even need because there's absolutely no way I'll be able to spend all of that money unless I'm living off of 300,000 a year, which that is too much. Well, maybe in 37 years it might not be a lot because of inflation, but I still
Totally
feel
understand.
like you can comfortably live off of $300,000 even in 37 years. It's still very possible.
I
So,
100%,
yeah.
100%. And I think what you brought up the 4% rule. I know 4% rule. I have heard a lot of podcasts. They also talk about 4% rule of thumb, which I think it's a very good way of kind of characterizing it. But even the beauty of it, I think at the time is was also taking into account adjustment for inflation. So I think that's
Exactly.
really nice consideration for that. And I think I must comment, like I think the target you've set and the 12 years 45 is I think is very impressive. So and the so great job on having that clarity. I think it's so important because many times you've talked to folks like, hey, I want to become financially independent, and maybe they have some vague ideas, but it's not as clear. It's because without having some clarity, it's so much harder to know, like, are you on the right track? What do you need to do? With the idea of trying to really reinforce that journey, right? How can you try to get there? And I know you talked about the why. I love that how you incorporate even in your response, like around having that choice, pursuing things that you're passionate about, like and having that freedom. I think is super crucial. Um, One perhaps follow up to that as well is like, what are some of your thoughts or advice that you have, Nina, for folks that wanting to pursue financial independence but maybe don't know where to start or what to do? Any thoughts that comes to your mind? Any lessons that you've learned so far in your journey?
I think the most important thing is like you need to first of all calculate your fire number. You need to know that number. And then second of all, you need to start investing like today because you can't save your way to wealth, unfortunately. You cannot. If you run the numbers and see how much if you were saving $500 a month in regards to investing, you can see the big difference. You can't save your way to wealth, and investing is the biggest way that's gonna take you there. And the most important thing, and I keep saying it because it's time, starting now. Now, it's the biggest time to start because you have a lot of room for your money to grow. Imagine someone who started investing at 18 versus someone who started investing at 30. Even if the person investing at 18 invested just $100 or $200, once you run the numbers, you're gonna see that they're still gonna be way richer than the person who started investing late, even though they're investing more technically. So
Hmm.
time is your biggest factor. I'll tell you to just start. And again, start with what you have. I mean, by the time you get into financial independence, even if you don't reach the number you set for yourself, it don't have to be 3 million. Even if I know I see people who have retired off of $800,000, even 500,000. Everybody's number is different based on how they want to live and stuff like that. And another thing too is Joe arbitrage, you can move to another country. Like where I come from, I'm from Africa, honestly, Cameroon, and You don't need $100,000 a year to live off of. What are you gonna use that money for? That is a lot of money. And I know some other countries that are way cheaper too. You literally need only about thousand to $2,000 a month, and you're good. That is a way lot of money. So some people are looking to relocate to in the USA and maybe North America, Canada. It's expensive because cost of living is
Hmm.
high. Some people retire off of 800 and they move out because they're no longer working. They can move out to other countries and live there. You have Mexico, you have Asia, you have India, you have Africa, so many great countries
Hmm.
that money, your money is gonna go way further than maybe in the USA, Europe, or in Canada. So that's another thing too. You don't need to reach that number. You always know that you have an option to move out somewhere else if you don't like want to live here anymore. You're not tied to one geographical location.
Very true. And I think building on that, like I think, so let's say for some, it may not be a possibility to move to a whole new country, even consideration of like maybe relocating to a
A
lower
cheaper
cost of
state.
living. Yeah, cities even. Like I've heard a lot of those examples as well, like folks moving from one city to another, or maybe from one
Yeah,
state to another.
in a
Uh,
state.
yeah, yeah,
Yeah, like in the
definitely.
US, it's so expensive. Like I live in the DMV area. The DMV is expensive. Like you have DC, Maryland, Virginia, it's expensive. New York is expensive. California is expensive. But you see people moving from there to South Carolina,
Hmm.
to Arkansas, to the Midwest. The Midwest is really cheap. You have so many great states that if you're paying, say, $3,000 in rent here, you move to the Midwest, your rent is only like 1,200. That's just slashing the price into
Wow.
two.
Yeah,
And because you no longer work for an employer that you need to be at that particular location, especially if you have to go into work, you're fine because now you do work.
there's
All
no
you
that
need is a
limitation.
laptop nowadays and you can
Yeah.
and Wi-Fi, you can get your work done. So
Right.
yeah.
And to your point, like with the advancement of technology as well, like and the ability, depending on the type of skill set that you have, depending on type of like service that you provide. So you brought up the example of financial coaching. So if that's something that you're passionate about and you're good at and you have the clientele, there's no kind of physical location that limits you because these days through the power of Zoom, through the power of like technology, digital media, you can connect with your clients anywhere in the world. So
Yep.
that's
Like
super
see,
fast.
you're in Canada, I'm in the US and we're
Right,
talking.
yeah, look at that. Yeah, we're already connecting on this
Yeah.
call, just like that. I want to definitely ask you as one of my quite almost last questions as well here, Nina. I want to hear, like, what does Nina, what type of resources Nina kind of yourself you have read or you've come across or you actively listen to, whether it's podcasts, books, whatever that might be, that you found value that you would like to recommend to other viewers. I know many times when folks are trying to get started, there are a group of folks that are really passionate about the topics and want to learn more, but they don't know where to start. So, are there some of those resources that you can recommend, and that would be fantastic?
Yeah, off of the top of my head, I know YouTube podcasts and then physical books. I read The Simple Part to Wealth. That was a
Hmm.
very good book. There's this guy, Ramsey Satit. He has a very good book. What's the name of Ramiz's book
I will
again?
teach
I
you
Will
to be
Teach You to Be
rich.
Rich.
Yeah, I
Yeah,
love his
that is
podcast
a
and
good
book.
book. I
Yeah.
always recommend that book to people because that book teach you how to reach to live your rich life, and that's where I
Hmm.
learned how to live my rich life,
Absolutely.
to prioritize the things that bring me joy and spend on them, and the ones that do not bring me joy, don't spend money on them. Because I'm very in line with what Ramit teaches because I'm like, why will I save and invest so much money and I cannot live in the moment? Like anything could happen. So I want to still live in the moment as long as I encourage people to save money, to invest. I want to see do the things that make you happy, spend time with your family, travel, see new places, like invest in yourself because you're the biggest investment that you'll ever make. Invest in yourself, do
Hmm.
those things, and then investment book like The Intelligent Investor.
Yep.
They can even come to the top of my mind. I love podcasts like in the USA, you have the Money Guy Show. I love
Oh,
their podcasts.
you
I
should
also
check it
love
out.
Bigger Pockets Money. It
Yeah.
teaches you a lot about
Mindy
real
and the
estate.
folks, right? They're doing a
Yeah,
good
it's
job.
Mindy. It teaches you a lot about real estate if you want to learn about real
Hmm.
estate. You see, so many people would not even take maybe 12 years to retire because they just invested in properties and their properties are bringing them cash flow. So
Hmm.
you see people who took like 5 years and had like maybe 30 buildings or units, and that's bringing them cash flow and they retired. So you don't even have to wait for 20 years. There's so many ways to go about seeking financial freedom, right? If you choose to go the real estate route, Bigger Pockets Money Podcast is a very good podcast because it can help you learn all of that. And then I have other different shows that I watch and maybe like podcasts that you can watch to learn about investing. And I'm gonna recommend Blossom. I I
Yeah,
stumbled on Blossom in a very funny way. Blossom is an investing platform where you have investors. I think right now it's mostly North America, the USA, and Canada. It's formed by Canadians and it started in Canada, British, Vancouver, and then moved over to the US. I think I joined Blossom in like January. And I've met so many connections of Blossom. I've learned from so many people on there. We're constantly learning from one another. And before, sometimes I'll have some Canadian clients, and I didn't know how the different systems work in Canadian. Just being on the Blossom ads, since it's a highly
it's
Canadian
amazing.
app and you have a lot of Canadians out there, they have good recommendations. I can see real-time recommendations from people. Like I never knew about XEQT. I learned from you guys
Yeah.
that are investing in XEQT, like an all-in-one dividend investment. I didn't know about it, and I just learned that ETF from you guys. I think it's an ETF or a mutual fund, right?
Yeah, it's an all-in-one in kind of
ETF.
combination of ETF. Yeah,
I
it
never
makes
knew
sense.
about it. I learned it from you guys on there. So Blossom is a very good place for you to also learn, socialize, and
Hmm.
I've
Make
actually
great
met people
connections.
out
Yeah.
of Blossom. Like they had some meetups. I went to the one in New York.
Yeah,
I
I
met
saw one of your posts. That was fascinating. It's amazing that
guys.
you took that kind of connections into like physical. That's amazing. Yeah. How
Yeah.
was that experience?
It was really good because I was like, I live in Baltimore. It's like 3 hours, 4 hours drive from New York where they were. I was like, I've driven to further places. I might as well drive and go there. So I
That's
drove
amazing.
there. I connected with the owners of Blossom, the
Oh,
people
cool. Was it
involved.
one of the
So
Blossom events, Nina?
yes, one of
Oh,
the
amazing.
meetups.
Yeah.
Yes, it was so
That's
good. It was
yeah.
really good. And I'm really proud and appreciative of them having the platform of bringing investors together because it doesn't feel like a taboo anymore talking about money and investing.
Hmm.
Honestly, where I come from and how I grew up, money is not something we talk about. Talk less of investing. So it's
Hmm.
when you bring up that topic, people are very uncomfortable.
Hmm.
So I just love to have a platform where you can openly discuss such stuff without getting any bias or people feeling a kind of way. And I really love that.
Yeah, no, definitely. I 100% agree. Echo your sentiments. I think Blossom has done a fantastic job. Definitely big shout out to Max and Brandon. I know the co-founders of Blossom. Have
I
done a
was trying to shout
fantastic
out their
job.
names and I just had a brain frog. I
Yeah,
forgot
no
all
worries.
their
All good,
names.
all good. And then, yeah, bringing it all to US, I think definitely the right move as well. Like, I don't know, there's so many kind of demand as well for these type of discussions and platforms. And I agree with your notion as well. The fact that it's a safe platform whereby you can learn, you can stay curious, you can ask questions. Of course, as you go through the contents. I think we talked about it earlier as well. Like, digest it. It's not a platform for financial advice, but more so like, for a learning perspective and maybe sharing
Engagement,
ideas, engaging.
collaboration.
Exactly. Yeah, exactly. So no, I love that. And I can definitely tell you, like, I think my Blossom rap tells a story of how much time I've spent last year on Blossom. It was
I,
fascinating. Yeah.
I saw mine and I was embarrassed. I was like 17,000. Oh
I know.
my
It's like same here. It's
God.
like, I don't think I was as much, but yeah, that's fascinating.
I was embarrassed. I'm like, okay, I'm gonna take a step back. But I was like,
Oh,
it's a good thing to connect with fellow investors.
yeah.
At least I'm not because before I'll be yapping on social media, just scrolling. Before you know it, I'm two
Hmm.
hours on TikTok. TikTok is very active in social media. But I'm like, if I'm on Blossom and I'm learning, reading
Yeah.
from people,
Making those
collaborating,
connections.
and now
Yeah.
they do have the messaging feature,
Yeah.
you can
That's
back and forth
fascinating.
with people. I was like, it's a good thing. I mean, I'm embarrassed, but it's good.
No, it's all good, and especially if that's something that you do see yourself, over the longer period of time, like pursuing as like your passion area. I think why not? Like you're definitely in the right group of folks. So, those are all my questions that I had for you, Nina. Before I wrap up, though, is there any final thoughts? You wanna say anything that I you wished I asked you but I didn't? I just want to make sure I give you the last chance to reflect.
Yeah, I'm just gonna say that if anyone is not investing, I feel like this is in the time where we're living right now, there's never been a better time to have access to investing than today. Because when I read from books and YouTube, it was so hard for people to invest 10, 15, even 20 years ago, even 10 years, as much as 10 years ago. It was not as accessible like right now, a lot of different brokerages, a lot of options. I just want everybody to invest, and as long as you have an income, you can invest even $10. So that's the good thing. Just $10, and once you see how that account is growing, that's the good thing about investing. I mean, you just have a euphoria and you just have this adrenaline rush, and you see how your account is growing. it boosts you and you can just want to go find more money to invest. You can make more money to invest. So that's the thing. And even if you're not looking to retire early, I tell people to still save for their future. Even some people love their job. Some people want to work until 67. I appreciate that. I respect that. I'm not telling everybody to retire at 40, 45. That's not for you, if you love your job and what you do. Some people love working. But just be able to have that supplemental income and income that you can pass down generational wealth. I'm really big on that. Pass down generational wealth to your kids. It's going to help you in the future. So everyone should be investing 10, 15, $20 a month. It's going to go a long way. And it's so accessible right now. I know for Canadians, you guys have like Quest Trade,
Hmm.
Wealthsimple. That makes investing so easy for you guys. We
Totally.
don't have Wealthsimple in the US, but in the US, we have like Fidelity, we have Vanguard, we have M1. We have Schwab, we have Robinhood, we have Momo. It's so many brokerages out there. I cannot even list all
Hmm.
of them. Even you can invest on Cash App right now.
Oh,
I
really?
don't know if you guys don't have Cash App in
No,
Canada,
no.
but we have what you call Cash App in the US, and
Wow.
they started offering investing. Yeah,
Investing so many, it seems like there are a lot of competition in the platforms, right?
so
To
much.
your point, Nina, though, like I think start small, start early. Like, there's no other time better than today. Of course, to do your due diligence, make sure, build this emergency funds and all of that. But at the end of it,
Mhm.
you mentioned it very nicely. As simple as $10. I think anybody can afford to do that. And through the journey, you also learn more. That's how you
Learn more.
gauge and you learn through that experience.
Yep.
Awesome. Thank you so much, Nina, for your time. I appreciate you, like, working with me to find a suitable time, and then sharing your wisdom with me and the rest of our audience. I really enjoyed this our conversation, and I look forward to continue your journey on Blossom. Thank you so much.
Thank you so much, Mo, and thank you for giving me the opportunity to be able to speak on your platform. And yeah, I'm looking forward to us collaborating, encouraging one another to just be the best investors and just follow our strategy. I mean, at the end of the day, I want everyone to win. That's what's important.
Totally. We are here to support each other and support everybody on that journey. Thank you so much,
Yep.
Nina. It's been my pleasure.